The new mortgage rules have been announced in Canada, and it's going to affect real estate market in so many ways. But I wanted to take some time in order to process this, be able to dig deeper and talk to industry professionals like mortgage brokers and be able to summarize it for you so that you can make an educated decision for your next real estate journey. Let's see how the new mortgage rules will actually affect real estate outlook for the remainder of 2024 and 2025. The first change is increase in insured mortgage cap. As of now, if you were to make a purchase under $1 million, you do not require to provide 20% down payment, and you will still be able to get insured mortgage, which is backed by CMHC and the government. Therefore, the lender, here's an example. If you were to make a purchase for $1.2 million, for the first $500,000, you need to provide 5%, and for the difference between 500 to up to 1.5 million, you need to provide 10%. So, for example, in a $1.2 million purchase, as of now, you need minimum 20%, which is $240,000. But as of December 15, you can provide $95,000 and still be able to purchase that property. However, again, remember, you need to get qualified for that mortgage. So please speak with your mortgage broker in order to find out what you can qualify for. Second is the 30-year amortization for insured mortgages. Now, the first-time home buyers and those who are purchasing newly built home can now opt in for 30-year amortization. This extension from the standard 25 years reduces the monthly mortgage payment. However, it increases the overall interest that you'll be paying over the life of the loan. But this could result to 10 to 15% more affordability because your monthly payment is reduced. Again, speak with your mortgage broker to make sure you have a full picture what you can actually get out of the changes. And last is, if you're a homeowner and currently having a mortgage that is up for renewal, before this change, you had two options. One, to stay with your current lender. So once it's time for you to renew, they will send you a letter asking you to renew at this rate, whatever rate they offer you. So if you just sign it and return, you can renew with them and they won't even ask you whether you're still employed or not, which to me is still crazy. However, this would have one issue, because if you were not agreeing with that interest rate that they're providing and you wanted to go and shop around and see what other lenders are providing, and if you decide to switch your lender, then you still need to get qualified, which means you need to provide your employment letter, your pay stubs, your current financial situation, which in some cases can result into issues. Speaking of mortgage rates, as of recording this video on October 3rd, 2024, the interest rates are on decline. Here you can see an example which I have compared the rates from September 29th to October 3rd. As you see, there's a slight reduction from September 29th to October 3rd. So this trend will continue with the upcoming two interest rate announcements by Bank of Canada. And the expectation is that the Bank of Canada will also continue reducing rates in 2025. However, keep in mind, any meaningful and significant change in the interest rates will take 10 to 12 months until it actually shows its effect in the economy. And here's the market update for September 2024. The Toronto Real Estate Board releases their stats for the past month. And here, as you can see, the inventory is sitting at 5.5 months. So this is well into buyer's market. The prices have dropped year over year. However, the month over month has increased slightly. The condos is still facing significant price reductions. I mean, it's still 3.3% reduction in price year over year. However, it's due to the fact that there are tons of inventory out there in the condo segment. Not all of the inventory that is out there is actually nice condos with nice floor plans or nice views. Most of them are investor bought small units without nice views and no parking and no locker. So that segment, they don't see a whole lot of activity. However, on the other side, if you have a condo that has nice views or it's a large unit with nice amenities, I actually have seen them selling pretty fast. This is by far my favorite chart, and you can see how the interest rate actually affects the average home price. So the blue dots represents the interest rates, and the red dots representing the average home price. Here in this period of time, that's when back in days of COVID, you could get 1.5% variable rate. And as you see, the overnight rate that Bank of Canada releases is 0.25. So you would get 1.5% variable or 2% as fixed. However, February 2022, when the prices started to peak and the inflation went to the roof, the Bank of Canada had to put a pause and start to increase the interest rates. And as you see here, they increased dramatically and the prices fell down off the cliff. And they kept the interest rate high and even increased again, but then they kept it at 5% for the overnight rate for quite some time. This was when you would get fixed rate for 6.2%, which was quite high. Therefore, it affected the market and again, prices had declined. And a lot of people are asking, like, what will happen now with all these changes? So prices should fall a bit more in 2024. I don't see any reason that they should go up. And by December, a lot of these listings that are out there and not selling will come off the market. However, in 2025, considering the new mortgage rules that we just talked about and lower interest rates that are coming down, and Bank of Canada will continue to reduce the interest rates, the listings will sell faster, but prices will not go up yet. Now, the question is, should you buy now? Well, if you're going to hold for minimum, and I repeat, minimum 5 years, there's a good chance that condos will come back in 2027 and 2028. But don't expect any meaningful price increase in the next 12 months. However, the single family homes on low rise is quite different. Now, with these changes, a lot of houses that are sitting between $1 to $1.5 million will see a lot of activity after this new change comes into effect as of December 15th. So there will be a lot of activity in that range. However, on the high price point in a specific areas that are well above $2-3 million, they will not get affected and will continue to have its own group of interested buyers wanting to move into that area. But remember, a lot of those buyers are moving up the property ladder. So they need to sell their condo, their smaller house, or their semi-detached in order to move up to this level. And these changes will positively affect them and they will be able to make this change. So in overall, there will be more transactions in 2025. However, on condo segment, if you're a seller right now and thinking about selling your condo in this current market condition, unless you have a very unique property like hard loft or something with large outdoor space, you have to be the absolute best price option versus the competition. Remember, only 15% of the listings are selling every month. So if you want to be part of that 15%, you need to make sure you're priced absolutely on point. Otherwise, you will be chasing the market down month by month. In summary, if you don't need to sell, just don't sell for no reason. You will lose money and you'll be better off to have a long-term plan and minimum 5-year plan. And if you stick to that plan, you'll be happy by the end of it. Condo market will pick up and it usually comes back faster than expected. And the reason for that is the slow or near to zero pre-construction sale. Remember, if the developers cannot sell the units, they're not going to build them, which means there's going to be a huge gap in supply in the next 3 to 4 years. Right now, there are a lot of buildings that are becoming available for occupancy, which were sold and built over the past 5-6 years. So in summary, don't sell for no reason, you will lose money. Have a 5-year plan and stick to it. Real estate is a long-term game and you better off have a 5 to 10-year plan and follow the plan in order to become successful. Condo market will pick up and it usually comes back faster than expected. The reason is the slow or near to zero pre-construction sales. Remember, developers will not build those condos if they cannot sell it. Which means now that we are not selling these condos right now, we're going to have a huge supply issue in the next 3 to 4 years. All other condos that have come to completion today, they were sold 7 years ago and was under construction during the past few years, that now they have come to completion. So imagine if we are not selling now, there won't be new condos in the 3-4 years. And to people who have paid $1,300 per square foot or more for the pre-construction unit, you're going to have to wait a little longer to break even. There is no reason for the market in the resale side to trade condos in that price range. So it's going to take some time for the market to pick up and also catch up into that price range. So hold on to your property, have a long-term plan, and you'll be happy that you did. Thank you very much for watching. My name is Pasha Barazende. I'm a local real estate specialist here in City of Toronto. We help a lot of buyers, sellers, and investors with their real estate needs. Our job is to make sure buyers, sellers, and investors are educated and have a clear picture of what is going on in the real estate so they can make an educated decision. If you have any questions or wanted to have a chat with me, you can use the link down below and you can book a call with me and I will be happy to have a chat. Thank you very much.